Hello, everyone. After 3 days of losses, we finally got some reprieve and that the market went up. Now, is this just a temporary bounce back, a dead cat bounce, as we say, which my cat objects to strenuously, but that's the term used for when things have gone down a lot and then spring back up a little bit. So I don't think it's a big deal. The NASDAQ went up 1%. Yay, team. What's more important is what happened today, Tuesday, August 6th, in the aftermarket. The big earnings call for me was SMCI, Super Microcomputer, and it came in with a good forecast, but the earnings missed, which is the most important part. Super Micro announces 10-for-1 stock split. Shares plunge 13% on earnings miss. Shares of server company Super Microcomputer plunged 13% on Tuesday after the company announced fiscal fourth quarter earnings that missed analyst expectations. Super Micro said gross margin dropped to 11.2% from 17% in the year-ago quarter and from 15.5% in the third quarter. The company also announced a 10-for-1 stock split set to begin trading on a splits-adjusted basis on October 1st. Super Microcomputer fell more than 10% in extended trading after reporting quarterly revenue and profit that missed analyst estimates, outweighing an annual sales outlook that was billions above Wall Street projections. Profit, excluding some items, was $6.25 a share in the period ended June 30th, the company said Tuesday in a statement. That's short of Super Micro's previous forecast and the $8.25 average analyst estimate. Sales were $5.31 billion compared with an average projection of $5.32 billion, according to data compiled by Bloomberg. So their sales missed by 1/100th of a billion. So Wall Street isn't forgiving of this company because it's gone up so much. And I'm showing you a headline that says much the same thing, but it's mainly that their earnings missed analyst estimates. The company tried to say it's well-positioned for the future to gain from artificial intelligence investments, but we want to see what's happening now. And the important thing about this picture is look at that to the right side of the picture. Look at the server racks. You know, they're just massive, and I'm sure they're terribly expensive, and they make a lot of money on those. The importance of Super Microcomputer isn't Super Microcomputer so much in my mind. It's about how deep am I going to go into Nvidia? And I think the answer is Nvidia could experience more of a drop. It could go down another 25%, and Tom Lee is saying so. He doesn't say the 25%, but he's saying that it surely could drop. Tom Lee is a Super Bowl, okay? And so when he comes out and says in this post that Nvidia stock is poised for a third drop, and continues with, recently Nvidia's stock price hit a 52-week high, but then experienced two drops, reaching as low as $101.37. While many investment banks and analysts predict Nvidia will soon rebound and reach new highs, we anticipate a possible third drop this quarter. And that's the important news from Super Microcomputer's earnings report. I think that Nvidia is going to go down another 25%, possibly, to about $75. So save your coins, boys and girls. I think you're going to get the chance to buy Nvidia at a super discount price. And I think I'm going to be buying with both hands and both feet at that point. Other stocks in the after hours on Tuesday, August 6th are not encouraging. Stocks making the biggest moves after hours: Airbnb, Super Microcomputer, TripAdvisor, Wynn Resorts, and more. Now, of those companies listed there, they all went down except for Wynn Resorts, which is gambling, which I don't want to invest in. The other company reporting good earnings and revenue was Reddit, but even that went down 2%. So I think the fear of recession is gripping the market. The markets are counting on the Fed to head off recession with sizable interest rate cuts. In the market's eyes, the Fed finds itself either poised to head off recession or doomed to repeat the mistakes of its recent past. No recession today, but one is increasingly inevitable by year end if the Fed fails to act, said Steve Blitz, chief U.S. economist at T.S. Lombard. Traders are pricing in a half-point September cut, followed by aggressive easing that could top 2.25 percentage points off the Fed's short-term borrowing rate by the end of next year. So the artificial intelligence trade is off for now, for me. I think I'm pretty much very happy, keep receiving interest until this recession gets over. I think we're likely already in a recession. I think I'm going to wait at least until October or November to contemplate getting back in. Hopefully after the election, we get a little bit of a Christmas rally and it's time to jump back in to a degree. That's the most positive scenario I can envision. But right now, it's just playing with SQQQ, which is the triple leverage shorting of the QQQ, which is the 100 largest companies on the NASDAQ. And even that is very choppy. And so it's mostly kind of a day trade. And I'm just playing with it. It's not much of a trade for me. But it's something to do, and I can't resist trading this market. Of the companies reporting earnings in the aftermarket, Super Microcomputer is most important, but second to that, in my mind, was Airbnb, because I think that says something about the broader economy. Airbnb plunges after soft outlook signals slowing U.S. demand. Forecasts for sales and nights booked miss analyst estimates. Shorter booking lead times and slower U.S. demand dampen gains. And as we look at the chart on Super Microcomputer, it ended the day at $616, but in the aftermarket, it went down to $535. Lost 81 points, or over 13%. And as you look at the moving averages, it's below its 50-day moving average, but worse than that is it went below its 200-day moving average. Holy buckets. And its relative strength is only 29, which is poor. So right now, my big hope was going to be Nvidia on August 21st. And maybe they could still shock us, It's an amazing company, but Super Microcomputer is suggesting, in my mind, that Nvidia is going to come out probably with good earnings, but they won't be super fantastic, wonderful earnings, and that's what people want to hear. And so I think it'll be a little bit of a disappointment. I don't think it's going to be much of a boost to the market. And I think until this election gets over and we get maybe a little bit of a Christmas rally, and that's being extremely optimistic. Otherwise, I think we're going into recession, and I think we got to ride our way through this. And I'm doing a little bit of shorting, not much else. I'm happy to collect my interest. I actually am kind of sad that they're going to decrease the interest rates because I like the interest, don't you? Thank you.